As I sit here in early 2021, having some discussions with clients about income tax and taxes, it made me think, and it really got me going about how little control we have about taxes. And I know this isn't a shocker to any one of you, but I just found it rather interesting. And I wanted to share a couple thoughts on taxes in 2021. So first off, I see now that we have an extension. We can go out until May 17th is the filing date for most people if you're an individual filing for taxes. And it just made me think, and it reinforces the idea that I've often lived by. And again, one of my founding principles is this long-term thinking versus short-term gains. And so with long-term thinking, it really is hitting home the fact that a lot of people are conditioned to believe that, hey, I need to defer as much tax as I can. But this is a prime example of the government controlling the game, and they control the rules, and they can change the rules anytime they want. And what do I mean by that? This is a prime example. We can't get everything done by April 15th. Oh, we're going to move it to May 17th for filing deadline, which most people are going to rejoice in, but it's just prolonging the inevitable. But more importantly, what I see going on from Washington and actually what's in legislation right now, and what we already know, that if nothing else changes, in 2025, tax rates are going to change. Tax rates for individuals, the tax cuts, again, they call them tax cuts, and I'm just going to call it a tax increase because that's what it is. It isn't a tax cut that's going to be repealed. It's going to be just a tax increase. It's going to happen in 2025. But the noise coming out of Washington is it's going to happen sooner. But just think about how easily it is for them to change the rules. You're making long-term plans with your money. So you've been conditioned to think, put your money in a deferred account, put your money in a deferred account, put your money in a deferred account. And no, that wasn't a skip on the record. That was just me just reinforcing. That's what we've been taught to believe. And that thought process is such a short-term gain, because why are we doing that? We have to ask ourselves, why do we do that? So we can save taxes today? That's pretty much the only reason that we've been told to do it. That's what our CPA tells us to do. And I go, yeah, but what tax rate are you going to be paying come the time you want to take it out? Think about the amount of uncertainty that you are creating. Think about how your actions are not in alignment with your values. Do you want more certainty in life, or do you want less certainty in life? I don't know what the future is going to bring. I have no idea what the tax rates are going to bring. Are they going to go higher? Are they going to go lower? Historically, if we look at taxes, we're in some of the lowest tax rates we've ever been in. But yet we're being told to defer to a later date. The way they're printing money in Washington, again, I don't have a crystal ball. It's been in the shop, it's broken. But I personally don't see where tax rates are going to get any cheaper than they are right now. So are they on sale? That's the way to look at it. Do you have the ability to convert from an IRA to a Roth? Maybe now's the time to do it. We have to ask all these questions, and you can reach out to me and you can discuss this with me. You can debate it with me. That's fine. I would love to have that debate about, should we be deferring taxes? And again, if you have those opportunities where you can say, hey, I have an IRA, I have a rollover, when we put it in context of this long-term thinking that we should be looking at, how is that being of service to you? I don't know that it is. I really believe that those type of accounts that defer this tax could be a potential time bomb for anyone that's out there and has a large amount of money in these retirement accounts, because we just don't know. And when you don't know, then the question is, how do you plan? How do you have a long-term focus when you can't plan because you don't know how much of your retirement money belongs to the IRS or the federal government? Because if somebody comes to me and says, hey, I have $1 million in my retirement account, I said, there might be $1 million in that retirement account, but not $1 million is yours. You have a not so silent partner that wants his fair share. No matter who you are, that's going to be the case. All that money coming out potentially can be taxed. So again, from a long-term thinking perspective, what are we doing? Why are we participating in short-term gains? Why is that process in conflict with what our belief system is? It's just because we've been ingrained and hammered to believe that is the way that we're supposed to save for retirement. I can tell you there's a better way to do that. That's by you taking control of your financing. You taking control, you being responsible for those dollars. Give to Caesar what is Caesar's today. Don't let him determine what that amount's going to be sometime in the future. And then once you have control, you can determine what you can do with that money and when you take it out and how you spend it. And don't be afraid, because you're going to have to pay so much in taxes in the future when you have a less ability to pay for it. So that's the biggest thing right now going on is I see the proposals that are coming out and the ideas that we're only going to tax individuals over $200,000. Until when do they change the rules again? When is it $100,000? When is it $50,000? When is it $10? Again, playing in their game when they control the rules is not a wise decision. So think about it. Pay onto them what's owed to them, and then move on. And then you can make some real plans from a long-term strategy. And again, these are things that are going to be happening, and this is happening right now. And then in the future, this is already some things that are happening that are already in legislation is in 2025, a lot of the tax cuts that came to a lot of us are going to sunset. The increase in standard deductions is going to be going away. That is going to go back to the old ones. Mortgage interest deduction, that's going to go away in 2025. Again, this isn't speculation. It's in law right now. It was part of that package that was passed. In order to get it passed, they had to put these sunset provisions in. The ability to have some pass-through deductions and just a lot of different stuff that's in that tax code is going to go away. The estate tax. Now, people are going to go, $11.5 million, that doesn't affect me. If you own a business, if you own farm ground, if you own really anything that's wealth creation, that's creating a cash flow for you and your business, even individually, when they do reduce those taxes, I don't know what they're going to do. Sometimes there's talk all over the place. I think the latest I heard is that they're settling at $3 million individually. You might think, hey, that doesn't really affect me, or it doesn't affect you today, but when's it going to affect you? And so what are you doing to plan for that? Can you take advantage of where we're at today? I have a client, we had a discussion the other day, and the discussion was all around how we could pass his $13 million estate without having to pay estate tax. And so working with a CPA, working with an estate planning attorney, we came to the conclusion he should gift the majority of his estate. So gift it out of his current estate. And what that did, it took advantage of today's estate tax brackets. And right now, according to the material that's out there, the IRS says that if they do change the rates in the future, they won't come back after those. Just think about that as an opportunity. Again, I'm not a CPA. These are just my observations. These are my discussions with my clients. And this is what the CPA and those people that understand how to do tax planning, working with me and the clients that I have, this is the discussions we're having. These people worked hard to grow their business. He started off just working as a general contractor in this business and moving dirt. And now they've made it into a large multi-company business that has got some wealth now. And they don't feel wealthy. They don't feel like they have a lot of money. But what they don't want to do, what he doesn't want to do, is give it away to the IRS because he wants it for his children. He wants to be able to pass that legacy on to his kids. Again, so why is that so passionate to me? It's because one of my founding principles, besides the long-term thinking process, is that ability to pass knowledge and understanding and your hard work onto that next generation and multiple generations. And stop being captive, stop being enslaved by the thinking that we have to start from zero. If I work hard, if you work hard, why is it a bad thing to have the foundation set along with the knowledge, not just the money, but along with the knowledge and understanding of how to do that and how to make money? Should we not be passing that on to our next generations? And I believe you have to. I believe it's your obligation. You might disagree with me, and that's fine. But my belief is, why not pass as much on to the next generation? Not so that they can be ultimately wealthy and not have to work, but so they can ultimately help more and more people along the way as well. Instill those ideas, those thought processes of not just bring yourself along, but bring everybody else along. The idea that a rising tide rises all boats. I'm a firm believer in that. And if I can pass that along to every generation that comes after me, Think how much good you can do, how much good I can do by bringing everybody up. Not just yourself, but bringing everybody up. But you do that by not giving it away to somebody else. Not giving it away. When I say somebody else, I'm talking Uncle Sam. Because who knows better how to, run your ship than you? Who knows better how to sell who you are and what you do and what's important to you than you? I'm a firm believer in helping those that need a helping hand. But again, how do I do that? I do that by empowering people, not by gifting to people, empowering people to take control of their financial lives and take control of these God-given talents that everybody has, and putting them to their best use. So again, it's not about me saying that, well, estate tax, I'm not getting that argument. Well, estate tax is just tax those so we don't have this generational wealth. Well, I believe that generational wealth is good. I would encourage everyone to want to have a generational wealth. Build on the foundation that was put in place by hard work and trials and tribulations. Why recreate the wheel every time you start a new generation? Why restart every process? Why start a family farm over and over and over again? Why start a family business over and over again? Just because we haven't thought about the process. We haven't given it more thought than we do when we go on vacation or buy a pickup. Think about the process. Think about the vision of how long-term do you want to be thinking? And do you want to pass that knowledge, the knowledge more important than the money, onto the next generation and how to use that? So it turned from talking about taxes, but taxes are a great wealth destroyer. We talk about it many times on our previous podcasts and blogs that we've put out there. Taxes are a huge wealth destroyer, probably the largest wealth destroyer that we've seen. Besides financing costs and obviously fees and stuff like that, but taxes are a huge wealth destroyer. And we voluntarily pay more than we need to a lot of times. Not so much by just writing an extra check, but we voluntarily do it because we don't get educated. I listen to a lot of CPAs, and they talk about it, is that a guy I listen to and read a lot of his stuff, Tom Wheelwright, he does that. He says the same thing. I don't remember exactly what the quote is, but he says the tax code might be 1,700 pages long, or 2,700 pages long, and there's like 40 pages telling you what income is, and then the rest is telling you what income isn't, or how to get out of, or how to deduct the income. So what I find interesting is that, are we educating ourselves? Do we think that there isn't a better avenue? Part of it starts with the conditioned thinking. Again, understanding that taxes are a huge wealth destroyer, and understanding that the decisions we're making now, what are the consequences 20, 30 years from now, 10 years from now, whatever it is. I had clients back when I first got started in the business 30 years ago. They had these things called HR10s, old Keel plans. And it was a farmer and his a good friend and a good client. And these Keel plans were started before I got there. And I encouraged him to keep putting money into it because I didn't know any better. I wasn't educated. Then we got talking, and then the longer we had a relationship and years go by, soon 10, 15 years go by, and he made the comment to me. He says, now I started taking money out of these Keels. He said, I'm paying more in taxes now. And again, this was in the late 90s, early 2000s. He said, I'm paying more in taxes today than I've ever paid in the past. So think about that. Again, he didn't have the ability to deduct like he did when he was running his farm and his business. It was all straight income to him. And so he deducted from a lower tax bracket to a higher tax bracket just because we didn't have the vision. We didn't have the understanding that we do now, that we should just, pay the taxes today, potentially, take a look at it, see if it makes sense to you, and then move forward. It's just like buying a piece of equipment. Just because you had a good year, you want to reduce your taxes, so you go out and you spend $1 to save 30 cents. If you needed that item, if you needed that piece of equipment, hey, great, that's fabulous. Go ahead and buy it. Makes sense. But don't buy stuff. Don't spend don't spend $50,000 on a new truck or a new piece of equipment just to save $15,000 in taxes. If you want to do that, donate it to me. I'll declare all $50,000 in income. I'm just kidding there. No. Sort of. If you really want to donate to me or pay me, I'll take the money and then you can deduct it. And that way you saved in taxes. But just, again, it's the thought process that we're talking about. Thought process of doing everything we can do today to save taxes today when really taxes are the cheapest we've seen in a long time and may ever see. So again, don't let the short-term gratification of lowering your tax bracket make you or force you in a situation where you're making silly decisions about deferring it maybe into a much higher tax bracket in the future. And again, if you think taxes are going down, you're going to be in a lower tax bracket in the future, well, that's fine. I don't say that I'm right or wrong. I'm just saying that's my observation. So again, just to recap, it's what are we talking about with taxes just this year? And again, it's just about playing in the game that the IRS sets. They change the rules. They move the goalposts and they change the rules whenever they want. The government does. But yet we're voluntarily choosing to participate in that game. And when I talk about the game, I'm talking about the long-term game. Again, my job is to empower you to take control of your finances and your financing system and really your life. And part of that is not abdicating that control of taxation for 10, 20, or 30 years down the road. Just think about that for a bit. Once your money has been taxed, now it's free and clear. What could you be doing with it? Again, you have to be responsible. It doesn't come without strings. It doesn't come without conditions. The conditions are that you have to be responsible with your money. Just because you have an increase in income because you chose not to defer it in a deferred account doesn't mean you should spend it. Where should we be putting it? Where should we be investing it? Those are some of the questions that we should be talking about. Drop me a line. Let me know what you think. Love to have a conversation with you about this. But ultimately, what I'm challenging you to do is just think about how you're being conditioned to do the things that really are contrary to what your belief system is. If your belief system is that, hey, I want to think long term, I want this financial, this